But that initial phone call to the borrower is probably one of the most important things we do. A lot of the rest of it takes place when we're actually texting or emailing, they're providing documents, that sort of thing. So understanding the borrower's financial situation, not only do we talk to them about income, everything else, we may talk to them about where their down payment's coming from. Do they have it? Is it in a bank account? Are they getting it as a gift? Are they taking it from a investment account, meaning 401k, TSP, that sort of thing? With all of that in place, we'll then look at debt ratios based on income, based on what they tell us. What can they afford? And that'll also determine what loan program we show them. Some programs like a USDA loan are very strict when it comes to debt ratios and credit score. So those two factors weigh in or are very important when determining what we put together to present them. So evaluating their credit worthiness, we talked about this last time with credit and everything else, but reviewing that credit history for not just score, but for large deposits, transfers. This is one way we actually question people and go, well, what is this deposit? You have to tell us what it is, or what is this transfer? Do they have another job that they're actually getting money from? They're not showing us. Do they pay child support or alimony and they're not telling us? All of these are things that we actually look into. And one of the reasons why we have to document and show what these deposits and transfers, where they're coming from or where they're going. Especially if you're doing an income-based loan like USDA or first-time homebuyer programs, all of this comes into play. And that's also part of the red flags as far as bankruptcies, foreclosures. We talk to them about all of this during our initial phone call. I actually go in depth and ask them about being married, divorced, separated, child support, alimony. All of these are things that we have to document. We have to get paperwork to show whether if it's bankruptcies or foreclosures, whether they're taken care of, how long ago, what is the date we go off of to know what they can buy or when they can buy. It also determines the program that we're going to show them, because some things are 7 years, some things are 2 years. So when we're determining a borrower's budget, not only do we talk to them about this, some borrowers may come to us and say, I just want to know what I can pre-qualify for. What's the max? In that case, we'll take it up as high as we can based on their affordability and their debt ratios. A lot of borrowers, especially now, do not want to buy too much and be house poor, which is a good thing. But that gives us an idea of payment, where I need to put the payment, where I need to keep it at. Also, one of the problems we're seeing today is people are coming to us and wanting a payment of $1,500, $1,600. Right now, in this day and age, with rates in the sevens, you're not going to find that. If you do find it, it's generally a house that you're not going to want to move to or needs so much work you can't move into it. I don't even know if you can rent or get apartments. We have a couple agents sitting here with me now. I mean, renting a place now for $1,500, very limited.
A bedroom and a bathroom in somebody's house.
Somebody's basement. There you go. You might get that. So it's expectations. The borrowers that I do talk to, I talk to them about exactly that, what they're going to get, what the expectations are. A lot of times they'll adjust that desire. They'll go from 1,500. I start talking to them about, what have you been looking at? And this is where we kind of work together of, you've been looking at a $300,000 house. You've been looking at a 3-bedroom house. We'll start talking about that. And if that's their desire, I'm already looking at the info and I can tell them, well, you do qualify. Here's what the payment's going to be for that. And of course, we'll start talking to them about refinancing and everything as well. So down payment options. A lot of this comes after we have collected documents from them. We have verified all their information they've told us. Some people who fill out an application online will put in their net pay. So we really can't or don't want to just go off of that right away, because there might be a lot more income that we can use. We try to collect every single document from them. Once we have it, have reviewed it, answered all the questions about it, we then escalate up to where we set up a meeting to go over loan options, payments, down payment, and interest rates. We present it to them. You can see in this left picture, we do a virtual presentation. So there are some people that come in the office, but I'd say 99% of the people, we discuss these terms and options with them over the phone, real time, using a platform like this where we can show them loan amounts, the difference between FHA, USDA conventional, or VA and USDA. There's a lot of times where if you have a military borrower, I may not suggest VA is their best option. Sometimes USDA is a better option to preserve that VA for the move up house or a larger home in the future. USDA may be a better option, better rate. We just don't know until we talk to that borrower. Once we are done with all this, we put all these scenarios together. We meet with them, discuss the options. We fine tune it down to what programs they want to pursue. We know before they go out with you, we know they're going to be a USDA buyer. They're going to be an FHA buyer. We also know their price range to keep them comfortable with payment. And that helps you set up a search and be able to determine what houses they want to look at or what things are going to be way out of their range. If we call you and say, hey, they're good at 300,000, that's the payment, that's what I can qualify them up to, and they start sending you houses at 350, 375, you need to call me so that we can look at taxes, if there's an HOA, make sure it's truly out of their realm, and then we can either have a conversation with them or you guys can. So once you've taken them out, you found that perfect house, you guys are all familiar with this, you're going to call, we're going to write a letter. You know, there are lenders out there that'll give you a blanket letter that comes with loan program, TBD, interest rate, TBD, sales price, everything's TBD. You know, honestly, I think it's worthless. How do you know that person's qualified? If you're a listing agent and you see a letter come over and it's not specific to your property, specific to their offer, and it outlines the program that is in the offer, are you willing to take that? Probably not. Or you're going to have a lot of questions for that loan officer. So we make everything specific. It has the property address on it. You can see this one's blank, but that's just a preliminary one. We fill in the property address. We put in the rate that they're utilizing, the program they're utilizing, everything. One thing I do as well is we pick up the phone. We find out who that listing agent is. We call them right after we send the letter and make sure they know, hey, it's in your email box. It's waiting. Let us know what we can do to get this deal done. We go over not just the program, but I get permission from the borrower to talk to them about credit score is this, debt ratios are this, everything is good to go. We can close this loan, no problem. So, you know, the job of a loan officer, or my job of what I do, is to make sure not just you're the one talking to the agent to get the deal, but we're helping to get that deal and secure the home for your buyer as well. Ensuring a smooth transaction, when we're from the beginning to the very end, we are part of the relationship you have with that client or with that buyer. So from the very beginning, we're talking to them about the types of loans, the type of houses. They're asking us questions about inspections. Let's say they saw a house, they walked in and there's holes in the wall, or it needs painting, or carpet's torn. You know, those are things we get questions about all the time. We actually will answer those type of loan, whether it has to do with the appraisal. I actually pick up the phone and we'll call the agent, discuss it with them, find out, is this really a big deal? Are we able to do this type of loan? And then also through the process. So that loan scenario or program I use to present scenarios to the buyer stays active for the life of the transaction. So every time you find a house and that buyer says, I'd like to see numbers on this, they can text me, you can text me. I can actually change those numbers from my cell phone, from the computer, on weekends, in the evenings, and put up exactly that sales price they're thinking about offering, substitute, make sure the taxes match. They can see what their payment's going to be. They can see their cash out of pocket. So they're not only knowing, hey, I went over, I know what program I have, but now they actually are seeing what that program means for payment on that new house or the house they're thinking about making an offer on. And then, you know, guidance through the home search process, same thing. Some houses we may show them are USDA. They may come to us with a house that doesn't qualify USDA. We have to switch to FHA or conventional. It may be that the price is too high to go then. It may be that it's not in an area that qualifies. So it's our job to go over the different options with them, switch the program, show them what it means, and get them back to you. Happens quite a bit, especially borderline borrowers who come to me and I say, look, you can go USDA to 250. Anything over 250, you can go FHA or conventional, but you're capped at 300. So it happens quite a bit now where I show them scenarios based on all that. So questions, I don't know if there's anything, am I missing anything in the chat? Nope. Let me show you real quick. I want to take you through a process just of what I do. Every single loan officer is going to do their pre-qual process a little bit differently. Give me a second here, hopefully. I am still sharing. Where is my share? There we go. Okay. Hopefully this is up. I am screen sharing. Crystal, does that show the sales machine?
Yes.
Okay, awesome. So this is a process from the minute you guys call and say, hey, can you call this bar, get them pre-qualified? They're going to see a house tomorrow, and I think they're going to put an offer in. We will reach out to that bar. We get their information. They go into this contact setup right away where we will put their information in, match them up, or pair them to you as a realtor. They get moved over to this lead in. This is a CRM that was designed just for loan officers. It's something I actually pay for and use with all my clients. When they go to lead in, they actually get a video which explains to them the process. It gives them access to a mortgage app I use so that they can run payments on their own. It's not just an email that goes out. It's a live video I've recorded. They get texted to them and they listen to it. You actually get an email at that point saying we've talked to them and we're in the middle of the process. Once we've actually pulled credit, everything's good. They get moved over to 48-hour pre-approval where they'll get another video. That video explains this step. Hey, we're going to be collecting or sending you an email to collect documents. Make sure you get those back to us as soon as possible so that we can set up a time to go over numbers with you. That all goes out by text. You will get an email as well. So from there, they go to mortgage strategy call. Once I have all the docs in place, Crystal has reviewed them. We've answered all questions. We know for a fact what their real income is and what we can use for qualifying. They go over to mortgage strategy call, which allows them on an app to schedule an appointment with my calendar for a 15-minute call that we will then go over numbers. I share my screen, go over conventional, USDA, whatever it may be. If there's a specific house you've sent me, I've put in numbers for that house, and they're seeing really what that payment's going to be on the one they're going to look at tomorrow. From there, once we are done with that call, they get moved over to what is called house hunting, where they'll get another video, which explains, hey, congratulations, we're through this process. You're done dealing with me. Now it's on to the fun part. You get to look at houses. Let us know if we can update anything for you on that app. And once you are found one you want to put an offer in, we do a letter. From there, they're handed off to you and they sit and wait. And then you can see, just because of rates in the market we're in, we have 111 people in this right now that are still looking for homes. At any point in this process, if they are non-responsive, so let's go to 48 hours, 29 people we're waiting on. After a certain amount of time, they get kicked over to no pre-qual left behind, where we start following up with them by text and by email just to make sure they're still engaged or in the process. Some people forget about it. Some people lose the emails. Some people get busy with life, kids, whatever, and put it off and forget about it. We try to jog their memory with text. It's the same thing, and this has been a huge, when they go into, let's say, lead in, Or if you call a borrower and I text them and I don't get any response, I can put their information in this waiting on application, and it will send them a link to an application. It will text and email. Are you still interested in making an application? We're happy to help you answer any questions. From there, I've had people after 2 weeks text and go, hey, I forgot all about it. Yes, I want to fill out an application, and they'll do it that night and send it to me. So it's a great way to follow up with borrowers that have gone dormant or ignoring you. And then we'll move them over to No Lead Left Behind, which continues for another couple of weeks. So we give them every opportunity, or we take every chance we can to follow up and stay on that lead. From there, if they get a contract, we have a contract in, and then they're moved to processing. So in all these stages, you as an agent are getting an email letting you know where we are in the process. You may not even, I may not talk to you. We may move them over. They fill out an application at night. We start it, and you'll get an email that's saying, hey, we've made an application. We're moving forward. That may happen at 8:30, 8:45 in the morning because it happened overnight. So we try to stay in touch with you guys as well. Not everybody's process is the same. So it's important on my side. I want to make sure I'm staying in touch with every single person throughout the entire process. And that's the important part. So if anybody has any questions, let me know. You put in the chat room, or if something comes up later, this is going to be, we are recording, so this is going to be posted. I'm going to send it out to everybody. But if there's anything, feel free to email me, call me, or shoot me a text. I'm happy to help. All right.
I have a question, Dan.
Yeah,
So
go.
this is very cool information. It's neat to see your CM platform in the back and just how the process works. I think that's great. And but this is like a qualifying question, and I was thinking about this the other day, and I wanted to bring it up here. How often are we seeing? I always like to hear about like divorce situations, and the deed is changed and it's left in the wife's name or the husband's name, but the mortgage wasn't refied or the other party wasn't fully removed.
Right.
How often are you running into that, if at all?
Quite a bit. Well, I mean, we see it. I probably do or talk to 1, 2 a month that are going through divorce, separated, and either one wants to stay or they have to buy out the other one.
Mhm.
If there's a buyout and they don't have the cash on hand, we have to look at either doing a home equity line or a refi.
Sure.
If there's just, hey, I want out, she can have the house, great. There has to be something in place to state that.
Sure.
We'll refinance, move on.
Yeah.
There's a lot of people who can't qualify at a 2.5%, 3% now, or 2 years ago, and they're going to 7 on a refi. They may not be able to qualify for it.
Sure.
In that case, you may be able to call your lender and they do a modification. Every bank is different on what they're going to allow.
Sure.
They're still going to qualify you, make sure you can pay the payment.
Yeah.
But in that case, they may just remove you from the mortgage,
Mhm.
Or remove you altogether.
Sure.
If you're not on the mortgage, but you're on title, you can do a quick claim and have them removed.
Mhm.
That's easy enough.
Sure.
It's always something you want to check with your servicer. I tell everybody, check with them first.
Yeah.
To make sure you're not going to have any repercussions later on.
Might be an easy thing, or
Might be a very easy thing, or it might be something that'll catch you later on if you go to sell or do something.
Yeah, I just think about that. It makes a huge difference for someone to qualify, in a lot of circumstances. And so
Yes. Yep. Absolutely.
And
that's a hard thing right now, is a lot of people are sitting at between 3 and 5%.
Yeah.
And they can't refinance and go to 7.
Sure.
I've got a couple clients right now. We're sitting and waiting for rates to come down so they can do that and get the other one off so they can go buy. Now I did talk to one client, little thing that you can do is, if you have a separation agreement in place or a divorce decree, and it states that you are not obligated for the mortgage,
Mhm.
and the other person has their own bank account without your name on it, and they've been making payments for 10, 12 months, you should be able to move forward and buy another house without counting that obligation against you.
Okay.
Okay. Little different when you go to do like a USDA loan or something like that.
Sure.
But conventional FHA, you should be able to get by without counting that obligation.
And it's kind of like a waiver of the,
You have to have that legal agreement in place stating someone else is responsible, and be able to get documentation from that other party showing they've been paying it.
Sure.
And it has to be an account that does not have both names on it. So.
I have a question.
Yes, ma'am.
In terms of pre-approval, I assume everything is a hard credit pull.
No,
Is it not? Okay.
nope, that's a good point. So we do soft pulls for every single person that comes in unless they are saying, hey, I want to write on this house today. We cannot move forward and do a letter on a soft inquiry. But if someone comes in and says, I'm not sure what my credit is, we want to look into getting pre-qualified, we will do a soft inquiry and we make sure they know we're doing that, because it's not going to affect your credit the same way. You don't get all the phone calls from the junk, creditors and people marketing. So please tell all your clients that if you need to have a soft pull done without affecting your credit, we will do it all day long.
Okay.
We can still do simulators. We can still run some underwriting. We cannot run GUS. So if someone's going USDA and I need to really make sure that they're going to be approved for a USDA loan, we have to do a hard inquiry. But we have enough experience with that, with ratios, credit, everything else, that I can get them pretty close.
Okay.
Explain GUS, because that's something I didn't know for a long time. I thought that was-
What GUS is?
Yeah, I thought it was the person for a long time.
Jeffrey was asking what GUS was. It is not a guy sitting in a room and qualifying everybody. GUS is a government underwriting system. It is an underwriting system that USDA uses, and USDA uses alone. So it is when, like a DU, which is desktop underwriter, VA, FHA, conventional, we run through those. GUS is used to run for USDA, and that's how we figure out if someone is approved, prove eligible, manual underwrite, not going to buy a house. So that's what GUS is, if you ever hear that. I'm talking fast because I'm going to run out of time. I got 2 minutes left.
No, great content, Derek.
Anybody else? Okay, well, we're going to post this. It'll be out there. If anything else comes up, let me know. Or if there's anything I can do to help you or help any clients, feel free to reach out.